Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we continue to discuss the situation on the Japanese yen. As we said, probably the Japanese yen should have the strongest impact from the Fed decision, and it really has happened. So our suspicion on the changing in the Fed rhetoric has been confirmed, and analysis mostly treat the recent statement by the Fed as the dovish, because they said that the Fed has turned from the 4 times increasing of the rate in the 2016 to the just 2 times. So they have contracted it 2 times the possible rate hike in the 2016. And my thought is that, as I said yesterday, the Fed currently just can't cancel its previous talks that have been placed in the December, when they were really brave on the view on the economy, and they very enthusiastic, recall these enthusiastic talks and fascinating on recovering on the US economy, and we will, as they said, we will hike rate, and so we see real perspective for that, and everything was fine. But right now, as they have seen first the extreme dovish Bank of Japan steps, now they see the increase of the dovish steps in the European Central Bank. So Fed stands in a really difficult situation. And since this is the central bank, they can't just every month they can't change the mind. So I think that they will turn to the gradual accommodation of the dovish policy. So today they have said that we will probably increase rate in the June, and we will increase rate 2 times in 2016. In June they will say that yes, we definitely will increase rate, but probably closer to the end of the year. At the end of the year, they will say that, well, it's the end of the year, so what sense right now to shake the markets before the New Year's Day? So let's do it in next year. And this will happen only if the situation will be relatively smooth in the global economy. But if the strong dovish steps from the other central banks will increase the pressure on the Fed Reserve on the United States dollar and the economy of the United States, they will shake faster. They will start to move faster. I mean the Fed rhetoric on the statements. That's why, guys, currently, although we see the comments that mostly, as I said, so that yes, they have placed a bit dovish comment, but the perspective of rate hiking stands on the horizon. Well, my point of view is that this is just the first step to move this horizon as far as possible. And Fed probably will continue to do this. So that's just my 2 cents on the comments that you could read right now in the net. So on the Fed decision. So what we have on the technical picture, let's take a look at the short-term perspective. So on the Japanese yen, we even haven't got this probable rally before the announcement. So recall yesterday we said that, well, market hasn't touched some targets here and hasn't touched the monthly pivot point, and this really not bad chance that market really initially could show some technical spike here to touch these targets, and maybe some traders will close some positions before Fed announcement, and after that market has a chance to drop lower if Fed comments will be dovish. So as Fed comments was really dovish, we even haven't got this technical rally, so market just dropped down. So it means that the bearish pressure that we have discussed here starts to work, And minimum target of this pressure is, the taking out of these lows. This is the first point. Second point, by this action we finally have got the even theoretical destruction of the double ripple buy pattern. So yesterday it was still valid, at least theoretically. But today, yesterday on this drop, we already have got the absolute destruction of the double ripple pattern, and this means that we in fact have the double ripple failure. We do not call you to trade it, but because this is really very bad shape of this pattern. But anyway, this is just some bearish add-on to the overall picture. Finally, we have the breakout of this pennant, this triangle to the downside. The nearest perspective of this drop stands, as I said, below these lows, and here we get the butterfly buy pattern that has the target approximately the 110.30 area. It's right here. This area is important because, guys, I will show a weekly chart. Here we have in fact 1050 is the weekly fib support. It's right here. And this will be also the weekly, very close to the weekly oversold. So market probably will stop here for some time and could show some retracement up. But at the same time, guys, on the weekly chart we see that 1618 target that has been tested yet stands approximately at 108.50 area. So that will be the medium-term destination on the Japanese yen. Maybe we could treat this as agreement on the weekly chart, although it's really not small distance between the target and the fib level. But anyway, market probably should drop lower here. So that's the nearest perspective. Also take a look that this will be the daily oversold. So I think that in the short term, nearest target is 110.30, 110.50 area. That's what we should wait for on the Japanese yen. On the forward time frame chart, guys, you see that market, as I said, hasn't completed this setup, although it has started move up before Fed announcement. But take a look, as soon as it has started, market just collapsed, so wasn't able to reach this area. Now what we have, first of all, market has destroyed this butterfly totally since these lows have been taken out. Second, in a recent time, since the end of the February, market was forming here, as you can see, this tighter consolidation closer to the upper border of this wider consolidation. Right now this consolidation has been broken, and it means that market probably should move down the same distance as equals to the width, the height of this range is counted down. That will lead us approximately to the same area. So even we could try to measure it. It's approximately it's down, right, even lower. So you can see it's even approximately 110 even. So this confirms the idea that probably market will take it out of these lows and will drop lower. That's why, guys, if you're searching the chance for taking the position here, or maybe you already have the one, so you could monitor for this most recent ABCD pattern. That's most interesting for a perspective of the entry, because you can see market has dropped below 100% extension. That was minor reaction. Take a look, market has touched 100% minor reaction, drop lower. The next target will stand 1618 is 111.40 area. If market after it will hit it will show some minor retracement up, well, you could try to use it for taking the position. So that's probably the way how you could act here. Maybe you will find some other opportunities for taking the short position. If you would like to take the long position, well, I don't know. In fact, we do not have the context for that, but probably you should wait the reaching of some weekly supports. This probably will let you to take some very short-term bullish position if you would like, but current mostly we have the bearish context, and personally I do not see many reasons for taking the long position here right now. But for the going shorts, you probably could watch for this action or this EBCD and wait for the minor retracement here that could happen even today. Also, guys, pay attention that market has dropped below the weekly pivot support one, and this indicates that this is not just a retracement inside some bullish trend. It's not a retracement. This is, guys, the continuation of the short-term bearish trend, since, as you can see, weekly pivot support one wasn't able to hold price action above it. So usually when market shows just a retracement, pivot supports hold price action above it, and then market moves up. But the breakout through the weekly pivot support one is the one of the signs that is not just a retracement. This is continuation of the bearish trend. That's why, as I said, it's really significant chances that market will drop further, and nearest target, as I said, 110.30, 110.50 area.